Hello and welcome to another update video about gold. Here for gold, just a video today because we're at a key pivot point, we're at a key decision point here. It's quite similar to silver. At the moment, I have the view that we at least can count it in a way that we say since November, we moved up in a wave 1, first impulse, came down in a wave 2, and then we had here our additional 1-2 setup we've been talking about for last couple of weeks, and this is obviously now in the target area, in the support area, and I'm now waiting for a reversal to the upside to continue ideally here the move up in a third wave. Obviously it needs to hold support, otherwise it will drop possibly all the way down to 1826. So we're going to talk about the relevant supports at the moment. I did make a slight change to the wave count, nothing substantial, but what I did was I moved this wave 2 low from here to there, which had an impact on the support area. Again, nothing that would impact it imminently and would invalidate anything I said before. But if we draw the fibs now for the support area, you can see it's based now in the area between the 50% fib level and the 78.6. I think that's what it was before, but I had different here. It was slightly different, as you can see. So it's now adjusted, and that also makes more sense because now you can see we reacted perfectly to the 61.8% Fibonacci retracement, and it's at 1853. Yeah, so as long as this level is holding, we could expect now, at least we could be watching. Yeah, we can't really expect anything yet because there is no trend change yet. But we can be watching for a reversal in a third wave because the move down is now complete. We have enough waves to count the C wave of this wave 2 complete. It doesn't need to go any lower. It has fulfilled now all the minimum expectations of this correction. Yeah, I think in the last video we had already a lower low compared to the wave 3, but we didn't really have clear 5 waves now. And now we have a clear 5 wave move in a wave 5. 1, 2, 3, 4, 5 in possibly an ending diagonal. Yeah, so at least from a count point of view, all the requirements are fulfilled. And if now over the next few maybe days we're going to rally above the last swing high at 1881, then this could be an indication that the third wave has started. And I can give you just a rough target for the third wave, and it would be around, well, at the very least I would say $2,000 here, the 1-to-1 ratio. More ideal would be actually the $2,100 level, the 1.618 extension. We will see. But it actually looks like quite an extended wave 1. So we might only see the 1-to-1 ratio around $2,000. Yeah, because if the wave 1 is very much extended, which it clearly is with all these subwaves, it's not a clear 5-wave move here. Yeah, you have a multiple of that because we have extensions here, and because it's an extended wave 1, which is longer than a normal wave 1 would be. The wave 3 then usually only relates to the 1-to-1 ratio, yeah, not necessarily the 1.618 extension. But yeah, I mean, you know, anybody who's been waiting for this wave 2, there it is. You know, this is in a support area. We're currently holding the 1853 level. If we fail here, it could still come down to 1827 without invalidating the count. It would just be a deeper wave 2. Wave 2 can, without a problem, come down to the 78.6 fib. Gold, however, usually stops at the 61.8. We'll see. But it's a key pivot point now for gold, and it will be interesting. So that's why I wanted to make this video also to highlight to you that here on the hourly time frame, we start to see bullish divergences occur on the MACD, on the RSI. So we make lower lows on the price chart, but higher lows on the RSI and the MACD. And on the 4-hour chart, you see something very, very similar. And also momentum is increasing currently. For example, here on the 4-hour chart, we had a bullish crossover as well, and bullish momentum is increasing. But, you know, this is sort of temporary, but what is important is the bullish divergence, I think. You know, that's, you've got the count complete and we see a bullish divergence. That can be quite interesting, and certainly an indication that things could be changing, especially as you typically see the strongest reading at the peak of the third wave, which we saw okay? And the fifth wave then typically shows a bearish, in this case a bullish divergence. On top of that, we were here nicely rejected from the 61.8 fib twice, and we see a bit of a green candle now. Now, this obviously now needs to follow through, and we need to break above the last high. And if we do that, we could be ready for this third wave. That's really what I wanted to make you aware of. You know, and this is not really, I mean, yeah, this is a bullish outlook at this stage, but be aware that the key decision point here is at 1827. I mean, 1853 is one, but if we break below 1827, then this pattern is seriously at risk of failing. And then we have very, you know, from a very neutral standpoint, we only have three waves up. It could be an A wave, a B wave, and a C wave, and we could still get another low. Because sometimes I'm asked for the bearish view, but you know, obviously the bearish view is that if the bullish one here fails, and we really only clearly have three waves up, yeah, this is obviously, as long as you don't have five waves, you know, the risk is always there that the support is failing. Key is here to the Elliott wave method to understand where are those pivot points, what is the decision point, and the closer you are to the key invalidation point, the lower the risk is really to enter a position, because you can set your stop loss really tight, and the reward is quite high from here compared to the possible risk. So that's the main benefit of the Elliott wave method. That's where we are currently with gold. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.